All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the stock market is gonna go crazy in March. We started off today with a bang. It's the beginning of the month. We were expecting a little bit more calm this week, but every week after this, I am telling you, it goes downhill from here, and it's only going to get crazier. So I have everything for you. I got the keys, the plays, all of that. We're going to talk about the schedule and what to expect, and I mean it, man. It is really about to get crazy. March Madness. Beware the Ides of March. It is all here, but let's talk about today because this was even crazy. We actually were down due to the whole little close yesterday. People weren't feeling good. You were closing below some of the levels, and then all of a sudden, you gapped up because at night, China had some of the best manufacturing data in 10 years. That was really good news, especially for the China reopening. In the last couple of weeks, it's been hard to find good news. That was really good news, but then shortly thereafter, later, this is all before the bell, just later in the morning, Germany comes out with their CPI. It starts to peak back up again. It is no longer going down and comes in at 9.2. That starts to panic people a little bit. And then on top of it, we started to get all of our data and then the United States data. It really wasn't that hot. But the thing about this, like we've been talking about, this week is pretty much the calmest as far as the next 3 to 4 weeks that we have because it gets wild. Even on top of it, the dollar moved down because of the good news, and then it came back up because of the bad news. Then the bond yield sold off, and now they're at 4. And let me just tell you this. Last time that the 10-year yield was at 4%, I mean, you were trading like between like 380 and as low as 340. So it's about to get weird here. Anything can happen. If the data changes to the upside, I'm sure the market will follow. But if anything keeps going lower, we may have that bear market Raul rug pull on our heads, and then we'll see what happens. But we have all of that. There was a bunch of other earnings plays. CRM was crazy. Even Okta, and even another part about today, even though we sold off pretty decent, the Dow Jones closed green in energy, materials, industrial stocks. Caterpillar killed it, up 3.7%. Dow Jones, or not Dow Jones, Dow Inc., they were up 2.69. Boeing was even able to go up above 1%. It was a lot of weird moves, but beyond those industries, today was one of those days where everything sold off. Literally, the dollar went down, the bonds went down, safe havens, real estate stocks, utilities, tech stocks, it didn't matter. So, Chad, I hope you're ready for March. So make sure you guys like that video. Make sure you're subscribed. We do these updates every single night on this channel, and we are live every morning, baby. YouTube.com/The Stock Market. You can watch all the trades and everything. Even Rita. Yes, we got that. Yes, we are in at 200% today. I guess at 192. Oh, yeah, okay. Run it, baby. Yeah.
Working to the couch, it's a 20 less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, March Madness is here, and I say this sadly because this wasn't even that calm of a week. Granted, it's only Wednesday, so 50-50, Habibi. It could go either way from here, but the whole point is this was supposed to be our calm week. Next Friday, on the 10th, you are going to be getting the non-farm payrolls. Another thing on top of that, you're going to be getting Jerome Powell before Congress on March 8th. And remember what he did last year during that congressional meeting? It was bad. He started to surprise the market. So we'll see if anything comes out of that. But then after next week, non-farms and Powell, the next Tuesday, just a couple of days after, you're going to get the next CPI. And then the next Wednesday after that, you're going to get the FOMC, and right now, everybody in the world is still debating now on whether or not we are going to do 25 or 50 basis points, but let me show you this one. This was the first time it happened here today, but the September Fed futures are now pricing in a peak rate by September of 5.45. It hit 5.5 in the middle of the day. That's why you even saw the bonds even selling off and going crazy. This was all after our data, but why this is so important is we've been talking about this whole 5%, the market could handle it, but nobody in their right mind has prepared for 6%. And I'm telling you, especially how we opened up this year, nobody is thinking about it. And in a weird way, this is kind of like a check engine light, or it's like the thermometer on your car that measures engine heat. Usually it's not supposed to move up. It stays stable, but once it starts moving, like once it gets past that second bar, bro, it's about to overheat. You better check the coolant. So this is a big one because how this moves with the bonds and dollar and everything, that is going to start getting tricky. But this is where the whole market repricing and now maybe a quick catch up by the market, that could happen. Or even better, if this calms down, you will also watch the market calm down as well. But this is all what's been going on here. It's been a crazy quote unquote calm week. Next week gets even nuttier. And now coming into your second key, let's talk a little bit about today. There was that good news, and then there was bad news, and then it all arrived at once. So I've already told you what it was, but now coming to the ISM now, we are going to get a follow-up on this by the end of the week. That'll probably be the only other important data. You will get jobless claims in the morning tomorrow, but lately we've kind of found ways to ignore that, and especially with the non-farms right around the corner, I wouldn't be surprised if people focused on that. But the ISM data, it came in hot on every single aspect. So the overall gauge came in relatively the same, but then prices paid jumped up, and that was very surprising. That right off the bat, people didn't like, and the fact that that was bad just to read it like that, that wasn't good. I was expecting everybody was going to try to extrapolate from the new orders, and then that came in hot and had a very big bounce as well, and all of the data was just kind of showing these inflationary impulses in the economy. They're all roaring back after showing slight cooling from December to January. So we're going to see how that plays out. This is the simple recap. I already gave it to you there in the beginning. So let's find out how the rest of this week closes. And now ISM services, that's going to be the final one this week on Friday. And you've already seen how the ISM manufacturing have moved things. So keep that in mind for the bonds, the dollar, the market, and all of that. But coming into your final key, man, I still don't think this week has been too crazy given that we are at the same level of Friday, but we got to be real about it right now. You are sitting right on the cusp of this week. Borderline does nothing if we bounce in the next couple of days, or it's about to be a S show, more or less. Pretty much the 10-year is at 4%. That is very crucial. Like I told you, the market last time this happened did not like this at all. The dollar dropped huge today, and surprisingly, even though the dollar has been coming down, so has the market, and that could be also because of the Chinese yuan today. The good news in China strengthened the yuan. That brought down the dollar, but then throughout the day, the dollar came back, and then now finally, the market touched the 200-day moving average. This has been, doesn't matter, me with technicals and all of that. The fact is, the news was getting bad for the last 4 weeks. A lot of things were getting bad. If you wanted to cling to anything, you at least had these levels holding up. Well, today you broke the 200-day average. You closed above it. It bounced up there and then came right back down and then bounced again. But now all of these factors are kind of compiling, and things could easily get worse from here, or if they do chill out and you don't get that momentum through any of them, the 10-year chills out, the dollar finds a way to calm down, the market upholds these levels, this will buy you time until next week, and then you get all the data and everything else. But Chad, this is a crazy start to March. We are definitely going to have an exciting year. I don't know if it'll be as exciting as last year, but clearly some of the same rhythms and patterns have not disappeared just yet. So keep your head on a swivel. I hope you're ready, and let us get into the plays. So, right off the bat, we made a couple of plays today. Obviously, Rita was a killer. GG if you got into that one, but I'm starting with these two right here. Earnings, I like both of them. I have one of them, Okta, but CRM, Salesforce, they absolutely killed it. So, CRM is very high profile. This is kind of like Facebook. Think about how Facebook was down at $90, then they finally had a good earnings, then everybody started to buy it up. Well, go look at CRM CRM's chart, and you'll kind of notice the difference there, or the similarity, because they have been really, really falling off. They came back to their 2018 levels. I guess they could have dropped to 2015 like Meta, but the whole point was people were really worried. They thought it was going to be this tech stock that absolutely died. Earnings came in today. They had all those activist investors over the year getting in. They showed up. They kind of showed a rebound. I say kind of because revenue wasn't too crazy, but EPS, even this quarter, they beat on all fronts. So the conference call, that's really where the key is, and we're going to see how analysts take it. But so far, everybody is loving this. I really think this one is going to be the talk of the town tomorrow, and then even Okta, we are already in that one. It is at a very key level. It has like another $20 to even fill from some of the lows that it was in October, but they raised their guidance tremendously. They guided above almost every single estimate, and both of these ended up being good. So I don't know how the market's going to play out, but these guys might be in their own little world tomorrow, so keep your eyes out for that. I'm definitely going to be watching CRM, but I said after I was waiting for a pullback. I did not get it, so we are going to see what happens, but that is play number one. Then play number two, Win. I went short on them coming into the Chinese NPC. That is their National Party Congress. Usually, China stocks go up, but we've been kind of hearing rumors of the crackdown. Remember that, what was his name, Bao Fun or something like that, the guy who disappeared, that big banker. There was news today that it was due to a corruption scandal. Saw a little bit of a reaction, but most China stocks were up because of all of the good China data, and even then in China, we got numbers from Macau, their casino district. It was up 33% in February. That's why Win started shooting up. So the way I'm seeing it, any China crackdowns, if they try to kind of crack down on gambling or social culture at the NPC, I think Win will pay for it, and they have been an outperformer. So that's kind of the good and bad about this. Usually when we short the outperformers, it could either pay off very well or it will beat you with the stick. So we'll see. I only went with 50 shares. We'll go over that when I go over the plays, but that is play number two. And then finally, I don't know how you're going to feel about this one, UUP. Yes, the dollar. So I think there could be way better ways to play this, and the options are very difficult. You could ask the random play generator about that one, or if you've seen this in the past. If you get good timing, it could be awesome, but even with shares, I think you can maneuver this to actually get a decent price or a decent risk to reward and exposure without having to suffer if you are right and then you just don't get the right timing. But the way I'm looking at it is based on this schedule, everything I've told you here with March, if March truly does get crazy, and I'm sure it will with all of these events, the dollar is most likely going to be the winner. If the bond yields continue, people freak out, stocks go down, economic data gets really, really bad. Only way the dollar loses is if economic data gets really, really good. But if all of that stuff happens, I mean, the dollar is prime front and center. Other economies, everyone's going to look at this as the safe haven. It is really starting to look decent here. The only difficulty is how do you play this with the best risk to reward and making sure you actually get paid out on this move. So China today concealed a lot of the move because the yuan went up. They're really good news, best news in 10 years. It made the dollar go down, but like I'm saying here this last couple of days, you've been watching the dollar decline while the market's declining. That's something I always told you to watch out for. So whenever this trend breaks, the dollar may be ready to play. So going to be watching out for this. Don't have any plays on it now, but we will see what happens. But those are the main plays as far as everything else now, Chad. Let's get into everything else we did. I only did two things. I guess I only bought EPV, and then I shorted Win. I bought EPV from yesterday, 300 shares, 1087. Even despite the German CPI, it was still down on the day, so I grabbed 300 shares. I'm definitely willing to grab more of this. The thing is, I'd want to wait. And I think as March gets crazy, I'm not the only one who talked about this. I was very glad to hear it. Somebody on Bloomberg, one of the heads of the banks, they were saying the same thing, that nobody expected Europe, Germany, and all these guys to be the leader at the beginning of the year. So if all this inflation comes back, problems in the U.S., all of everything in between, this is going to have to pay for it. So I like it. It's a decent risk to reward. Obviously, it's a volatility ETF, so be careful of that. But I got 300 shares at 1087, and then I shorted 50 shares of Win at 111.39. So as far as everything else, I'm just holding what I got down on those BABA plays there. That ES from yesterday is still down 1,200. I was actually positive on it in the morning. The NQ still down on that as well. There's Rita, old Okta. That one was down, but now we're up on that, and I don't plan on selling out of that anytime soon. The Google is actually almost near break even. Amazon, I'm clapped on that. I haven't averaged down. I might want to wait here. We'll see as we get into any of the data, but remember, we're using that to balance out with this, and we're probably going to need a roll roll these over by next week. Other than that, though, still in the banks. I like that. This play has been holding up. The Bank of America is down, but Citi has been doing good. But I still think the banks are in prime position, especially with everything going up. And the last one that we're going to be watching is obviously Rita, and we'll go back to those covered calls like we talked about yesterday. Pretty much we could roll over right now and make sure we get the value, because remember, we agreed to sell our shares at 65. Stock hit as high as $95 today, but what you could do, see you're down 2,200. The idea would be sell the 105 or the 105. This is the one. We buy back this one, take the $2,000 loss, open this up for the same amount you lost. If it comes back down, you just break even and we lose the premium, but I'm waiting for tomorrow or the next couple of days. You do run the risk of getting a sign, but I'm sure that'll happen closer to the expiration. But the idea is if we get any more contracts, if they add more time frames, I'm sure we're going to get way more money from this, get a solid rollover, and then we'll good. But we have ways in and out to make sure we're going to secure that bag, and it was an awesome trade. But Chad, that is everything. Get ready for a wild month. Stay in the game and stay focused. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember everything's lawful for you, but don't mean that it's helpful. Everything could be lawful and life could be good, but don't let anything dominate you, baby. It's your time. You got to be the one who dominates. Take control. It is game time, and you're ready for it, baby. And enjoy the moment. Like I was telling you, I think it's a good reminder right now, because even though it's kind of weird, this is our last calm week, and then telling you March, oh man, you might have a whole new outlook on the year, or we'll get to confirm what the beginning of the year showed. So I hope you're ready, baby. But drink that water, stay hydrated, stay healthy, all of that, Chad. I love you. Thank you for holding it down. And horn.